Starting the meeting, boys. Be very quiet. Hunting rabbits. Good morning, everyone. Hopefully we've got good sound this morning. Let's get going. All right. Obviously, U.S. markets sold off really hard at the beginning of the session. It really looked for a period there early on that we were going to get some follow through. I think we got down about 1% in the S&P. Markets were really struggling, and you can see there we just had a real turnaround there. We regained about almost half of our losses at a point. And just really drifted sideways from there. So same sort of thing. We haven't been able to get any real follow through to the downside. We just kind of seem to be drifting down on the S&P, and because it's coming down in a slow drift, it's really not impacting the other markets the way that it normally would when you get a real correction. So we did see every sector that was down across the board, and we're really looking at a down week for most the indexes across the globe. The sound's not working. Okay. And we've got obviously we had a jobless claims numbers out yesterday that were slightly better than expected. We've got no non-farm payroll number today, so it's going to be a little bit light on the data front to that extent. But we're still just waiting to see what's going to go on with the shutdown, the government shutdown. Obama canceled his trip to Asia, obviously to try to get things repaired there sooner rather than later. But just doesn't really look like there's any light at the end of the tunnel at the moment there. Asian stocks mostly lower on the day, kind of following the states down a little bit, but same sort of thing. It's a drift. There's no real nerves that are evident there. So it's very controlled, and we're just not seeing any follow through because of that. We're seeing the Japanese yen strengthen this morning, and it's kind of been on a drift up as well. But they confirmed this morning that they're going to expand their monetary base by at least 60 trillion yen a year over the next few years. It's quite impressive that the yen's still not being able to weaken any more than it has with them printing money like that. But anyway, we've got a lot of stocks going ex-div over the weekend. We've got Discovery, we've got Cecil, First Strand, RMH, Aspen, and RMI. So quite a few shares. Cecil's obviously the huge divvy of 13 Rand 30. You can see yesterday we had a nice move to the upside on the back of that. So, just keep those in mind today. You might have a couple people coming in to chase some divs there today. We also had Samsung that came out with the quarter 3 numbers earlier this morning. Operating profit was better than expected at 10.1 trillion won versus 9.96 trillion won. So a little bit of a beat there. An international corporate action. And then, the two big data pieces today, the unemployment rate and non-farm payrolls, we're not getting because of the government shutdown. So, like I said, there's very little out there to guide the markets today. Just keep it tidy. Probably going to be very light on the volumes, unless we start to see really some sort of leadership out of, the indexes in Europe and then the States. I think we'll be on a bit of a drift today. All right, let's jump into the maps. Okay, first thing I want to have a look at here is the ALZ. I'm actually look at this on a 30-minute. And what I wanted to show here, let me just pull that out a little bit. We kind of, this obviously hasn't been a big sell-off, but we're coming down to test support, really where we gapped up from, right here at, let's see, 39, call it 39,420. We're coming down to test this level of support. Sorry, I was draw that a little bit better. You can see there, everything lines up quite beautifully there horizontally. So I think I really would be surprised if we don't necessarily see that level get tested this morning, just strictly because it's a level, and we've kind of been drifting down. The pattern every day has really been consistent. We've been drifting down earlier in the session, and then a little bit further into the afternoon, we start to get a little bit of buying support that's come into our market, even when the international indexes have been weak. So, if we drop out of this, drop below this, this is a little bit of a head and shoulder setup in this. I would say it's a bit of a mini head and shoulder, and for some reason all of a sudden I can't draw a freaking line here. Let's just try this again. There we go. You can see we've got a little bit of a head and shoulder setup going on here. If we break down out of this, I think we could fall another 1,000 points. So this level actually is a little bit more significant than it may appear up front. All right, let's look at S&P. Look at it on a 1 year. What I wanted to show is simply just the trend line that we've kind of been holding at quite significantly. You can see there every time we get down and touch or close to it, we manage to really push higher off of this trend line. That level is at about 1665, 1667, somewhere in that range, which is really peanuts from here. I mean, we're talking about 10, 12 points lower than where we are right now, so on the spot market. So just keep that in mind. I mean, there's definitely some support coming up soon. It's also where we topped out here back in May. So I would think that we're looking for some sort of support there. If we do break below trendline support on the S&P, then I think that could be a catalyst to finally get the markets coming lower, but I wouldn't really necessarily expect it. All right, let's look at first rand. First rand, you can see here, really just kind of consolidating. We're looking at a 30-day, and just kind of been consolidating for maybe 10 sessions or so, and not able to really break out to the downside. We tried to pull back several times down into the maybe mid to upper 33s, and just couldn't keep any of that weakness going. I think if we can push above 34.60, I think you can buy this thing maybe all the way up to 35.5. I wouldn't be surprised to see it make a move like that ahead of its divvy tomorrow. So just keep that in mind. If we get above 34.60 on the day in first round, I think you can you can play it alongside today. All right, let's look at Sassel. Sassel kind of making, we talked about this the other day, and it kept coming down here and testing, but wouldn't really break below about the 77 level. And really now what we're seeing there is a breakout to the upside of a bit of a rough flag pattern here in Sassel. Obviously you got the big divvy tomorrow. The highs are around, let's see here, around 394. Or 494, sorry. So, I wouldn't be surprised to see us even get up as high as that today. Going into that, paying that huge divvy on Monday. So, watch that one today. I think on pullbacks you got to be looking to buy Sassel. Okay. Able. Able, we obviously talked about yesterday. We talked about the breakout that really happened here above, 2 sessions ago. And yesterday we were obviously looking for a second day play, and we actually finally got it toward the back half of the session. And the reason why I wanted to show it again is, we talked about the target being where we broke down from here, which is about $21. And I think it's, the way that we've moved up, it's difficult to try to buy some of these things when they make such a sharp move to the upside. But I think that guys are caught short of this thing in a bad way. It was one of the biggest shorted stocks on the market, I think, a month ago even, and I know that it would still be held very short. So I think a short squeeze here could be vicious. I wouldn't be surprised to see us pop up to $21 in the next session or two. So just keep that in mind if you're playing intraday. Remember, there are a lot of shorts out there. There probably is going to be some support there on almost every pullback, and like we said, the target's up here around $21. So just keep that in mind. All right, MTN yesterday gave us a mother of a fake breakout. We actually broke to all-time highs intraday. just shorten it up a little bit so we can see it a little bit better. We broke to all-time highs on an intraday basis, and we were way above the top end of this range. 199 was the previous closing high that happened back here on the 14th of August. The one thing that I would say is, yesterday does make it a little bit more doubtful in terms of the bullish view, but I still this thing is still looks like it's consolidating to potentially move higher. Unless we drop out the bottom end of this flag here and this consolidation, I would be very careful I would still be very careful to short it. Like I said, if it gets below this, then I think you can play the short side. But right now, this to me still looks like a bullish setup. I wouldn't be surprised to see if we get a close above 199. You got to be playing the long side at MTN if it closes above 199. All right, last local one here. We'll just look at Imperial. I've already shortened it up. We're going to draw this thing from the close. This is about the wickiest stock on the board. Some of the longest wicks that you see. It never tends to close on its highs or lows. But Imperial really looking like it can make a breakout here. We've been kind of in this little wedge, just kind of consolidating and narrowing consolidation over the past 4 or 5 months, and we keep, every time we do kind of break out, it's been a bit failed. But what's interesting here is that the top end of this range, we're getting closer to all-time highs in terms of the closing price, which is up at around 225. So we're only a couple bucks away from that. I think if we pop above this, it might be a decent little risk reward to get on the long side. And if we get above the all-time highs, then I really think you can jump on it. And the last one we'll look at in London, I'll have a look at Poly. Poly really breaking below some support here at about 6.5 pounds, and putting in a little bit of consolidation, possibly to move lower. But we're also kind of flagging a bit here, so I'd be just a touch wary if we don't break out the downside of this in the next session or two. If we do, I think we could retrace significantly lower, possibly even come down and test the lows of the year. But I think there's definitely some downside here, like I said, if we drop the bottom of this pattern. And that's it for today, guys. Thanks a lot.